You're listening to This Week in Real Estate with your host, Rob Golfi. Brought to you by the Golfi Team at RE/MAX Escarpment, featuring Conrad Zurini, broker-owner of RE/MAX Escarpment Realty Inc., and Brian Hogben, owner of Mission 35 Mortgages. Let's hear what's going on in real estate this week.
Hey guys, how's it going?
Fantastic.
Amazing. You know what? When I see those pictures of the three of us coming up, I mean, I can't believe how much we've changed, the three of us. You know what? It's funny how you take a picture, time stays still at that moment. Even 6 months later or a year later, you actually could see a bit of a difference, like just how, like, well, look at Brian. You lost some pounds there.
Well, that's what the market's doing to me right now, Rob. It's sucking my life away. That's what it is.
Yeah, don't you remember Obama after 8 years? He was all white hair. Obama after president. We should do our high school photos one time.
Yeah.
Our communion photo with the little thing here on the side.
Oh no, I had hair down to here in high school. You guys wouldn't even recognize it. It was something else.
So Conrad, I've got a picture. Like when you call me, I got your picture from probably 10, 15 years ago.
Oh,
like,
my God, that's hilarious.
Yeah,
long hair. Yeah.
Real wavy hair and everything.
Yeah.
So when you call, I'm like, I've seen a picture
That's
of a guy
funny.
that's probably, like from way back. So I haven't updated the picture, but I'll just leave it the way it is.
What the hell?
So I can't believe they really went for the jugular with the 1%, guys? Like we were thinking half a point, 0.75, but they just went for it. And I think they just had to get this economy slowing down. Like I punched out on, a couple of comments on social media saying, renters, be prepared to get that form. Your rent's going to increase. Everything's just like, this is going to cost the economy more money. Everything, like business, people that have line of credits that run their business.
Yeah.
I think it's going to even delay more people into thinking about buying or wondering where it's going to go. I think the only people that are going to move are the people that have to move, not people that want to move. Like, I think somebody that was looking at upsizing, just, let's just wait a little longer, maybe. I don't know. Like, it's like, Brian, that's your business, buddy. Like the 1%, like, and they're calling for another one. What, in September, you said, or is that true? Or
it's possible.
September.
Yep, it's possible that I might see it. And I think most people that we're talking to, because we've had a flurry of calls, as you can imagine, over the past 24 hours for people that are in variable rates. And you'd be surprised. Most people are actually, they don't love it. No one's happy about it. But most people are okay. When you go through the numbers, people were expecting an increase. Most people are like, okay. I guess that's what I'm going to pay. Right. So most people are actually going to be okay. So I don't think it's, the doom and gloom. It's just not something that anybody's excited about. Right.
Yeah.
But most people can actually afford it. Most people were qualified well above it. So I think and people are just tightening their belts a bit. Like you said, Rob, people are going to be spending less money. On the average, like a 1-point hike is almost $50 per $100,000. Right. So on a $500,000 mortgage, it's an extra $250. Like on a $750, you're up to $325, right? So it's a bit of money.
Well, people spend that on Starbucks alone, so they just have to give up Starbucks.
Yeah, but you know what? And I just did like our number one searched area was Millcroft in the company, like in North Burlington. And so today I went to Millcroft, and I looked at the height of the market where a single detached was in Millcroft, February 2022, and then I did today. And with the differential in price, and I did over 5%, there was a $200 a month savings where it is now, and you have a smaller mortgage. I look, Canadians are funny. I think like the stock market, everybody is baked this into the pricing already. I think this 1%, they talked about it for so long. Look, and they came out, Globe and Mail is famous. They came out, the Bank of Canada came out today and said, well, we misjudged oil prices and we misjudged consumer confidence after the pandemic, and now we're paying for it. And it's something I think I said last week. It's now the Fed meets July 26th, 27th. They're talking a 3/4 point. If they do 3/4, then we're both 2.5. But they're talking a point if they don't see some numbers coming up next week. Like the retail sales numbers are coming out next week and housing numbers. So if the Fed only does 0.75, I feel really good about the fall. If they go 1, hey, so be it. But they only have one thing. They only have a hammer, which is interest rates. That's the only thing they have. And I said today, it's like showing up on a job site, building a house, and you got plumbing, electrical, whatever. You show up with one thing, a hammer. That's all they got. So, I can't blame them. And look, I think Canadians are resilient, and they're not going to stay on the sidelines forever. And Rob, I think people will still, they're going to get adjusted to this. They got adjusted to the stress test. They'll get adjusted to this.
Yeah, they just got to get used to this new time and interest rate, and they just, and it'll be like this for a long time. I don't know if we'll ever see the 2%, the 1.5% or 1% interest rates ever again. I don't know. I'm not sure in our lifetime, but like that is something that that was unrealistic even at that point, and there was a lot of advantages, and the economy just blew up because of it. But we just got to get it. You're right. We just got to get adjusted to it. People, once they get used to it, we'll be back to normal. And
yeah, and I think,
go ahead. Sorry.
I was just going to say, and make sure you're taking it kind of 1 month at a time, right?
Yep.
Because it's kind of like Bank of Canada takes August off. Bank of Canada's meet again in September. Like Conrad said, new numbers come out. And you know what the banks are doing right now, these tricky banks? They're all sending out 5-year fixed renewals, 7-year fixed renewals, and 10-year fixed renewals. We're getting clients call right now. Oh, the bank just called and said, hey, if you want a 10-year fixed rate at 7.25%, you could lock in right now. I'm like,
they're like, the banks are.
I'm like, you got to do you if you're really concerned, but like, oh my gosh, like 7% for 10-year fix. And like, and you've got a massive penalty if you're breaking that as well too. And I think just, I think taking it 30 days at a time right now is something you got to look at.
Oh, it is absolutely. Now the other thing is it going to affect rentals that like our landlords are going to start increasing rent? Sometimes landlords just let it go for years and years, but now I guess they're going to probably start increasing rents. I understand on the single family homes they don't care too much, but I tell landlords that own 4-plexes, 6-plexes, you got to keep those rents up to date, because that makes the difference of the value of the property. And I got a feeling that we're going to see, I think, more people, getting rent increases, more landlords handing them out just because of this. That's happening. I mean, like mortgages are going to increase. Everything's going to. I don't know. Even though we've experienced this before, it still feels like it's new, though, Conrad?
Yeah. No, I know. But you know what? But again, there's so many other numbers, like the employment numbers are low and unemployment. It's just so many factors out there. And like, I don't even think they know what to do. They only, like I said, they have the one tool. But going back to the rentals, if you're November, if your place is built November and younger, November 2018 and younger, they don't even have to go with the guidelines, the provincial guidelines. So you will start to see those start to really ratchet up quite high. You could see 10% increases on those. And you're right. I think where those passive, owners of 4-plexes just said, I want to have a good tenant. I don't want to make any waves. They're going to take this, because this year was 2.5%, right? 2.4. They're going to take it. They'll take it this year. You're absolutely right, Rob. There's no question. So it'd be interesting if at one point renting was cheaper than buying. Now buying could be there's that number, that point in time. But people can't stay on the sidelines forever. Like if you're people living in their parents' home, basements, household creation ain't stopping. So it's a train, and immigration ain't stopping. So people are going to get accustomed to it and deal with it, right?
Is this going to affect developers and builders? Is it like, because I mean, a lot of these large builders, I mean, they got a lot of borrowed money. Like they have access to it. Obviously, the bottom line, it's going to affect the end consumer. Like when they work on their final numbers, I would imagine it would. What do you think?
Well, it's twofold. It's been twofold. Number one, all the trades took a big price increase. They all took a raise. in the last little while, and a couple of strikes have just been settled. So you've got, number one, you've got the cost of trades, the cost of materials, and then, you know, your construction financing is up. So things are getting on hold. People are saying, you know what? I heard there's between 5,000 and 10,000 projects in Toronto alone that are been put on hold. Forget about everything else. You have to be into it now, really in deep, to be able to continue. Otherwise, you're not. And people are waiting to see what's going to happen with trades. Like if the economy really slows down, and then these trades say, "Hey, looking for business," then that's a good thing. So it's not a, you know, look, we need to stabilize things. I think it went up really too fast.
Yeah, no, absolutely. And now the numbers are coming out, the inflation rate at for the second quarter. Like, they do it every quarterly, am I correct?
They have one every month that comes out.
Every month. Yeah.
So we haven't gotten last month's yet. Is that correct? The inflation for June?
No, but we got consumer numbers are at an all-time, but consumer numbers are at an all-time low. Look, people will take high inflation over the R word. They'll say, okay, I'll make it work. With inflation, they'll make it work, but when they hear the R word, they start to like, whoa.
Well, and I think that's where we're at now. And we were talking about the consumer confidence earlier, and I was talking with Conrad. Yeah. They just recently did a study, and it's about how optimistic Canadians are about their financial future. And it is currently right now at the lowest it's been since April of 2020, right? And that's when COVID just started. So if people have that low confidence right now in what's going to happen, that just means people are going to save more money now. They're not going to spend money.
They're going to hang on to it. They're not going to spend. You're right.
And that's the desired effect that they had with the hammer. They whack the hammer, stop spending. And I think it's just a matter of how long does that take to translate into the numbers? I don't know. That's how long, because it's a lagging effect.
A big part of the economy is the media. Like, I mean, if we're feeding them all this stuff and, you know, people and making people worried about the economy, guess what? Everybody pulls back and holds. They're not going to buy, you know, that dress and those pants and the outfit and everything they want to buy. Now, if everybody holds back, that's going to slow the economy down. And then people will slow down in buying houses. I mean, I think the investors are going to come out like crazy because this is the opportunity. And I just did a post right now, and I put out that you can become wealthy in a 10-year period if you're pretty aggressive. I think a guy's financial situation, 10 years seems like a lot, but it's not that much. For a 20-year-old, it's a lot. For, you know, a 30, 40-year-old, it's amazing how much wealth you can build in a decade. And I just posted that because I've seen guys become super wealthy in one decade. They just kept investing, buying. All of a sudden they wake up one morning saying, whoa, I can't believe what's happened. So it doesn't matter what the interest rates are at. I mean, I was buying houses at 12, 13% in the early 90s. And boy, that was painful. And I was just renewing. I was doing, I guess, variable, and I was just waiting for it to come down. And finally it came down. It made a huge difference on the mortgage. I mean, back then I was hoping to get it down to 7 or 8%, even though it was at 12, 13. But when it started dropping, I noticed a difference, like $300-400 a month difference in my mortgage payment when it started dropping. But I don't know. Like, I just I see the economy out there. I mean, has it affected? I think you're right. It is consumer confidence, Brian. There's no doubt about it.
I think you're right with that 10-year period, Rob. We're telling people again, the past 2 years that we went through was fast, in the sense that you got rich fast. Everything happened fast, right? But the sage advice that you're saying over 10 years is time is very forgiving the longer time you have, right? Mm-hmm. And you go in with a strategy at 10 years, time's forgiving. It doesn't matter if you bought 3 to 6 months ago, which was the peak, right? Let's say you got February. But if you got a 10-year time horizon, who cares? I remember when I bought my house off of Conrad, I thought I paid a lot for it. And I was like, oh my gosh.
Look at you today.
Well, yeah, you know, that was over 10 years ago. And it was like, well, that extra $5,000, we should have got more. But who cares, right? It's 10.
Exactly.
And having that long term is
and discipline. And it's discipline. and real estate has always been one of the best investments you can have, and there's without a doubt. So in the time, and I think in 3 years we'll be laughing at this point in time. I think it's going to be a lot less. Look, the pandemic, the last time you said that the consumer confidence, that recession, quote unquote, lasted 3 months. They feel this could maybe last a short period of time. When people start to see things turning around, they'll jump on it. Like I said, they can't sit on the sidelines forever. You know, immigration is still here, right?
Usually they say recessions last 6 to 9 months the most.
Yeah, and
that's what normal.
And supply is not there, guys. The supply is not there, plain and simple. Look, if you're buying in this market and selling in this market, God bless you. You're fine, and we'll see those increases again. Those steady, great real estate increases we've seen for decades. Believe me, you know. Look at the stock market. Look at the bank stocks are down, 25%, 30%. Like that, you're gambling when you enter that arena. Here, we know the fundamentals are strong, still very, very strong when it comes to real estate, bricks and mortar.
I believe in that. Guys, thank you so much. Have a great weekend, and we'll see you next week.
Yep. So.